It's a point for uptick, 42 points higher, 11,029, 11,030.
We have the 0.4%, and we have the mid-cap index, which is continuing in terms of outperformance.
Markets come off a little bit. We're up about 34 odd points.
It's been a strong market once again, slightly off the highest point of the day. If you're looking at the Nifty, even the mid-cap index, ICICI Bank really was one of your stocks of the day, 2% higher today. And in fact, this week now, it's up about 5%.
Bulls retain the upper hand on a choppy day. The Sensex and the Nifty end up at the highest point in a month. This is the highest that the Nifty has scaled since February 7th. Sensex gains 200 points. Wipro gains on hopes of an imminent buyback.
Broader markets have another roaring day. The mid-cap index gains more than 0.5%, led by big gains in stocks like Dilip Bilkon, Ashoka Bilkon, J&K Bank. Small cap index also ends about 0.7% higher. The small cap index and the mid cap index have gained over 11% in the last 11 trading sessions.
DHFL stock surges 11% after independent auditor exonerates the company from some of the allegations made by Cobra Post. Edelweiss too rises after CDPQ decides to invest 1,800 crores in its NBFC business.
ADAG stocks take a knock in trade after ICRA downgrades Reliance Capital rating by one notch. Reliance Capital and Reliance Power both down 2%, while Reliance Communication tanks 9%.
And finally, Infosys will not sacrifice margins for growth, says CEO Salil Parekh. He expects to end this financial year with margins of around 22-24%, as there's no slowdown in digital business. This is his first interview since taking over. Well, those were the top 5 headlines from Dalal Street. Hello and welcome to Markets Today Talkback, the show where we are going to tell you all that happened in those 6 hours of trading in just 5 headlines. And today, yet again, it was all-round bull domination. I'm Lata Venkatesh, with me my colleague Prashant Nair.
Hi Lata, and there was a bit of doubt at least 2 times during the trading session where the market came off and it looked like maybe it's going to pause and just digest all these gains, but then it kind of sort of picked up and moved on, and it was a pretty good close by 3:30. Over the next 30 minutes, we will talk about the top 5 stories. Our guests will answer your questions, and we have Ashwani, Gujral on the charts, and Deepan Mehta on fundamentals. Deepan, of course, is member BSE and NSE. Gentlemen, thanks very much, both of you, for being with us here on the show. But before we kick off the Q&A part of the show, let's take a quick look at what really happened right from the word go, the kind of cues we had, and how the market reacted to those. Lata.
Well, actually, for the second day running, India was an outperforming market, and it was an across-the-board rally. The Sensex and the Nifty, of course, are ending at February 7th highs, which is 1-month highs, and there are more and more stocks that are leading the rally. You can see that more clearly in the mid-cap space, where financials perhaps had a lead simply because you had Edelweiss and DHFL coming out with good news. Basically, what was seen as a broken down sector, one by one, it seems to be fixing a problem here, a problem there. And that led to an across-the-board rally in financials, which, of course, was only one of the sectors that did well. Almost all sectors were helping further yesterday's rally. So it was not as massive a rally as Tuesday, but to build on that already massive rally and score a 2:1 in terms of gainers versus losers, 2 stocks gaining for every 1 stock losing, what you will have to say is quite an achievement. Finally, of course, the global environment, while it didn't help in terms of any overwhelming risk on was missing, crude prices continue to remain around that $65 mark, and that has been of some help to the Indian markets as well. So 65 and change. But basically, stock-wise, what other than financials stood for you?
Lata, I mean, actually, the advanced decline is still spectacular, right? I mean,
yeah, of course.
2:1. I mean, so yeah, it was better yesterday and maybe better day before yesterday, but still
6:1.
6:1.
But that's...
So, but I was just looking at the small cap index and the mid cap index. In the last 11 sessions, both these indices have gained around 12% or so. So, and that is the reason why mid session there was, when the market cooled off a little bit, people said, okay, well, maybe the market pauses a little bit. But I mean, the close has been absolutely okay. 0.5% of the the mid-cap index, and the small-cap index also ending the day about 0.7% higher. Let's come to stocks now, and let's start with the large caps, Nifty really. BPCL, Bajaj Finance, ICICI Bank, Hindalco, Vedanta, Bharti Infratel, Reliance Industries. I mean, just to name a few of what did well. Pretty broad-based. In terms of losers, we had Z, which was down. There was Tata Motors, which was under pressure. I mean, Tata Motors had a big day yesterday, so there was some give back. Z also recently has pulled up so much. Indiabulls Housing also had a big day. I mean, so some give back, essentially, not very much beyond that. Top gainers, and this is where the real action is. So DHFL, Edelweiss Financial, we'll talk about both those in some detail in a bit. Delhi Bilcon. I mean, Delhi Bilcon recent low was 300. It's at 600 now. So it's double, basically. Praj Industries, another big one. We spoke with the management. Indian Bank, large gains, large volumes. Everready, there was Dredging Corp, some 15-16% gains on Dredging Corp. There was Suntech Realty, Lakshmi Vilas Bank, J&K Bank, Aban Offshore, Hoodco, Ashoka Bilcon, Spencer's, Repco was up 21% yesterday. It was up another 6%. Okay, 5% by close. Indigo was up 4%. Jubilant Food was up 4.5%. L&T Finance, Piramal Enterprises. So, and I'm only looking at the more actively well-owned part of the market, really. So, just to give you a sense of how the market is broad-basing, and I think that has been the story. Lata.
Oh, absolutely. But I was a bit surprised that the rally could hold out for 2 consecutive days. But the old resistances at about 11,080 still seem to be holding. But will they? That's the question to you, Ashwani. What have you made of the rally, and what would you take from today's price action, basically?
Well, it appears that, it's the first broad-based rally, and while it's still based on hope, but obviously for the first time the market is tending to expand instead of being very, very range-bound. So that way, with mid-cap, large-cap, both participating, I think another couple of 100 points on the Nifty, maybe fresh highs even on the Bank Nifty seems possible. So for the moment, possibly the expansion phase is getting done, and from tomorrow you could have some volatility. So if you are getting some sort of gap downs or intraday declines, there would still be buying opportunities.
Okay. So a couple of 100 points more on the Nifty possible, and the market is broad-basing. The second story, broader markets, of course, have another roaring day. The mid-cap index gained more than 0.5%. The small-cap index was up as well. The resurgence takes the gains on both these indices, as I said earlier, individually to about 12% in the last 11 trading sessions. Delhi Bilcon, Ashoka Bilcon, J&K Bank all led from the front. We've got a question which is coming up. Okay, I think we'll have a couple of questions on these mid-caps and small-caps in a bit, but I think we move on to the
third headline. And that's where, the mid-cap rallies perhaps leaders are. The third headline from the day is DHFL zoomed more than 11% after an independent auditor whom the company had appointed exonerated the company from some of the more serious allegations made by the website Cobra Post. The auditor's report released by the company to the exchange stated that there was no evidence of DHFL forming shell companies or being owned by those shell companies to divert funds. Remember, Cobra Post had alleged that DHFL had promoted 26 shell companies to siphon off about 35,000 crore rupees. Well, there were other allegations, some of which, some lapses in terms of procedures, the auditor thought did exist in DHFL not monitoring loans after giving them. There was also some doubts raised about the ownership of Darshan. But let's hear out what Mr. S.P. Tulsian had to say on the auditor's observations.
The allegations of the Cobra post which have been leveled are seen to be too wild and reckless, and part of that maybe this could be the procedural. Now in one of the paras also it says that the monitoring of the funds have not been done by the company, the post use. And maybe in the sanction committee where the loans are sanctioned of more than 200 crores, two are the promoters and one is the independent director. So again, these are the few lapses or maybe the loose end of the operational things. But I think that overall, if you draw the conclusion from the report, probably it sees that the things are not seen to be so reckless and so wild. Maybe to the extent of about 2,000 crore, in respect to the 4 companies having disbursed. Probably company should redress and give explanation on that account.
Okay, so that is DHFL. We've got a question from a viewer. Mahesh Gandhi has sent us this question through an SMS. He holds 150 shares of DHFL. Cost is 273 rupees each. He's a long-term investor and wants to know if he should hold or sell. 150 shares of DHFL at 273, still a far cry even after the recent bounce we've seen in DHFL. Ashwani, to you first, what would you recommend, DHFL?
Again, you buy the worst stock in a sector which is getting beat up. There is very little hope. I am not sure whether it will get back to his price. But, these sort of stocks, they become forgotten stocks because everybody starts to keep away from them because of corporate governance, etc. issues. Again, similar advice. In this case also, if you had to buy an NBFC, you should have bought Bajaj Finance. So, very little hope on this one as well. Maybe even now you can switch on to a better NBFC, L&T Finance and Holding. A similar price range, or maybe Bajaj Finance, but DHFL I don't think is likely to recover a whole lot.
Okay, well, Deepan, what would your sense be? Do you think DHFL deserves a look in because the charges are not all that serious according to the auditor Ostwald?
I seem to echo Ashwini's sentiment, and on the fundamental side, I think raising resources for the company will get all the more difficult, at least at inexpensive interest rates that it has been doing in the past, and that will certainly impact the growth going forward, and the company may find it difficult to raise resources and lend the way they have been doing so. So there would be a lot of curbs on the way they function, the growth rates that they have generated in the past. Only ray of hope is that if they get a strategic investor, that could perhaps change the outlook for the stock and the way investors are at present looking at this particular company. But save that particular corporate action, I think more or less the company would go in a sideways zone, and investors should look at exit opportunities whenever there's a rally like this.
Okay. Fair point, but Deepan, stay on. There is more from the NBFC space, or there was more. Edelweiss Financials rallied in trade thanks to CDPQ, the fund, the Canadian fund, which has agreed to pump in 1,800 crore rupees in Edelweiss's lending arm, that is its non-bank finance company. We caught up with Rashesh Shah, the chairman and CEO of Edelweiss Group, to understand what this transaction meant.
We signed the agreement. Now we'll just wait for the statutory approvals that we have to RBI and others and all we have to get. So we're hoping that between 4 to 5 weeks we should consummate this particular transaction. We expect that the conversion will be a function of the performance, but currently expectation is that they will end up owning something in the teens kind of a stake between 13, 14 to 18, 19% kind of a stake.
Okay, Rashesh Shah, they're explaining the transaction. Our next question is from Karthik Kamal. He's been holding 40 shares of Edelweiss for the last 2.5 odd months. He's a medium-term investor and wants to know if he should hold or sell Edelweiss. Cost is 150 rupees each, 150 rupees a share. Deepan, Edelweiss, what would your sense be?
I think valuations are very attractive at Edelweiss, and the stock has been beaten down considerably because of fears that they may not be able to raise adequate resources and may have to curtail their lending business. and some of it was reflected in the Q3 numbers as well. But I think this particular deal is quite impressive and certainly puts a stamp of approval as far as the street is concerned. And we saw that rally in the stock today. I think going forward also, if they're able to raise such funds from marquee investors, then that certainly spells very positive for the credit business, which is in fact the largest business for Edelweiss. My sense is that the worst is over for Edelweiss, and from this point on you will see earnings also gradually moving up. More importantly is that the PE multiple may get gradually re-rated on the higher side. So you could see significant outperformance from Edelweiss even as compared to other NBFCs over the next few months.
Okay, well, point taken. It does seem that mending is on the way. Ashwani, your thoughts on Edelweiss, that is?
Well, this is a much better stock. At least they have a business and they know what they are doing. Recently the stock was had gone up to 240, 250. I think here he can add on, and this is a much better stock than the other two.
Okay. Well, so that's a positive note or a positive advice coming on Edelweiss for Karthik Kamal from both our technical and our fundamental expert. We need to take a break. Let's leave you with some market opinion that we got from a mid-cap fund manager from Kotak AMC, Pankaj Tiberwal. He's Senior VP and Equity Fund Manager there, and this is what he thought of the mid-cap rally.
In the last 12 to 13 months, we saw there was a huge divergence of performance between Nifty and mid and small caps, and they reached at historical extremes. History suggests that post such kind of divergences, normally small cap and mid caps tend to outperform over the next 12 to 18 months. I think the last few days rally is more of the normalization of that part, where mid cap and small caps had become attractive on valuation. Having said that, we believe that this year is not going to be the same wave which we saw in 2017. It's more going to be stock pickers market.
We got through 3 of the top 5 stories of the day, so here's the 4th one. ADAG stocks took a knock after ICRA, the rating agency, downgraded Reliance Capital rating by 1 notch to A1. The rating agency stated that this action was primarily due to 2 reasons. 1, refinancing risk of short-term maturities, and 2nd, delay in monetizing the non-core investments. Reliance Capital and Reliance Power both were down 2%, while Reliance Communication tanked 9% in trade today.
Okay, so that's the ADA group of stocks, all of them in the red, but it was Reliance Communications that in percentage terms took a bigger knock. Some questions, actually on Reliance Communication actually. Bidhan Biswas says he has 810 shares of this company, bought at 37 rupees a share. He's a long-term investor. Yes, indeed. When was it 37? Maybe a year and a half ago, or maybe 2 years ago. He wants to know whether he should hold or sell. This is difficult. Deepen, does he just have to swallow the loss?
I think that's not at all difficult. You just hold on to the stock. It's like an option now, and whatever the cost you have paid for it, that's a sunk cost. And if any point of time there's any value unlocking in Reliance Communication, and they have said that there is land and building within the company which could be at some point of time sold and realized, and if some other positive development takes place within the company, then you could see the stock come back. But otherwise there's no point selling a stock like Reliance Communication at 6 rupees. You might as well let it be in your portfolio and hope for the best.
Okay.
Some rounding off error now, basically.
Yeah.
But okay, that is RCom. We move on to the last 5th story of the day. In an exclusive interview to CNBC-TV18, Infosys' CEO Salil Parekh said that the company will end the current financial year with a margin of between 22 to 24%. This is his first television interview since taking charge last year. Parekh also said that the digital business is growing at 15% and is showing no signs of a slowdown. Listen in.
If you look at this digital area that I was describing, one that's growing 30% for us, we shared some data a while ago. The addressable market for that is about 160 billion. That whole market is growing at around 15%. So that market today has shown no sign of slowing. Overall demand for the digital is what I shared. For the rest of the core services, the demand is stable. It's low single digits. We've laid out clearly our digital agenda. In addition to that, there are other areas of the business which are also doing well. As an example, engineering services. So we will look at acquisitions which fall in these areas, or some mid-sized ones which are opportunistic, which overlap some digital and some non-digital. And based on that, we will drive the acquisition agendas.
Okay, so the important point to note is that Infosys is growing its digital revenues at 30%. And the entire big digital pie, about $160 billion out there in the world, is itself growing at 15%. So Infosys clearly claiming a little more. Sudhakar has written to us on Infosys. He says he has 135 shares of the company, which he bought at 1150 rupees, says he's a long-term investor, wants to know if he should hold or sell. That's 135 shares that he has. What would you advise him, Deepan? Infosys, stay put?
I guess so. I think next 2-3 quarters may turn out to be good for Infosys, but our view is not very positive on the medium to long-term prospects of the sector. And the reason is that companies like Infosys, TCS, Wipro, HCL Tech, and a lot of the mid-caps in IT companies and CAT-based grew at low double-digit or high single-digit. And from an investment perspective, you want to buy into companies which can grow at 15-20% type of top line, bottom line. So while IT companies may not be great value creators, I think they also retain decent amount of value. So these are like companies which will give steady 8-10%, 12% type of returns going forward. And the best returns are already behind them over the last 12 to 14 months or so, when we saw a re-rating of the PE multiple and also earnings coming through quite decently because of base effect. But the base effect will start to evaporate from the June quarter, and then you will have very flattish type of top line, bottom line, and that may not be very interesting or appealing to a lot of investors. So I would be a bit cautious in the sector, but at least for the next 2-3 quarters or so, I think the likes of Infosys, TCS have some more steam to go, and you could see the stocks rallying by maybe 10-15% even from these levels.
Okay. Well, Ashwani, we can't take your version because we are out of time. Deepan and Ashwani, thank you very much for joining us on CNBC-TV18.
Well, it's a wrap here on this edition of Markets Today Talkback. From all of us here, thank you very much for watching. There's more coming up on the other side.